In today's episode, I interview Thijs Maas, the founder CEO of Onramper. Thijs went from studying law to teaching to helping blockchain startups to founding his own startup. We talked about how he met his co-founders, how he came up with the idea for Onramper, and what Onramper is. Onramper, it provides wallets, exchanges, and Web3 parties with easy access to fiat on-ramps. They've raised $6 million so far. And we talked about how they've grown in the crypto sphere, how they raise money, really architecting the product itself and how they've built what they built. So I learned a lot, and I hope you do as well. Please do like, subscribe, share the podcast if you enjoy it. And please send us a recommendation if you have a guest that you want to have on. Here is Thijs Maas. All right, Thijs, I am excited to chat with you. I don't get to talk to people in Europe or the Netherlands all that often. So I'm excited to hear both, obviously, what you're working on, but also life and learning about that part of the world. So why don't we, in a simplistic way, kick it off with your current foray, your founder, CEO of Onramper. Would love to hear more specifically what it was at the time that you started Onramper that kind of pulled you in and what you were originally trying to accomplish in the world by creating it.
Yeah, sure. I mean, it's been quite a bit of a journey getting here. And thank you for having me on the podcast. I see that we're at episode 370 something, I believe, or at least
Yeah.
nearing the 400. So you've definitely been busy. So that's really cool to see. Yeah, the road to OnRamper has been pretty interesting. Actually, my background originally isn't really in tech or engineering, as you often see. My background is in law. So all the way back to uni, I studied international business law, and then I went into the world of law firms, big law firms, really on the M&A acquisition side, IPOs, etc. And very quickly, I realized it wasn't the environment that I would see myself working in for a long time. It was very top down based in terms of culture. And pretty much, I like to say that law firms can be a bit like dinosaurs in terms of culture in that sense. And for me, there was a general lack of maybe competition based on merit. Everything was based on seniority, right? And that meant if you had wanted to get your voice in onto topics, generally, working for 5-6 years before you're taken seriously. Now, to me, that didn't seem like a great prospect. So I definitely had my eyes opened for other things at the time. And that was also when, so we're talking about 2016, 17. I was writing a lot about the crypto space. So I don't know if you remember those days, but the general information found online was pretty bad, really. And seeing as I was doing the research into crypto just out of pure interest, like everybody starts with a little bit of investing and then you actually read up on what you're investing in. When I was doing that research, I just found that writing was a pretty good way to structure thoughts generally. And I started combining my writing with insights from the legal space. So insights into financial law, securities laws, KYC, AML, GDPR, really the compliance, strategic compliance angle. And doing so, to my surprise, a lot of startups started reaching out to me. Because at the time, and now still to some extent, there was a lot of perceived legal uncertainty or just plain legal uncertainty. Um, and then one day you wake up and you realize, wait, for fun, I've been helping all of these startups, right, on this strategic compliance, go to market angle. Um, but every day I wake up and I dread going to this law firm. Why don't I just quit the law firm and start monetizing my own consultancy business? So that's what I did. And that's really how I got started originally in the crypto space. Then with that came, seeing a lot of startups, helping a lot of them, but also constantly having this itch of wanting to get involved further than just the legal compliance end. thinking, well, maybe sometimes this can be done better, that can be done better. Really, this sort of almost slightly egocentric way of, hey, just let me push for doing more within your company because I think you could approach things a different way. So I always had this itch to start building, in a sense, to really do my own thing. And that was realization number one during that time, really. And realization number two was my own time as a business model is just not scalable whatsoever, right? So I always wanted to build in crypto, and then when I met some of my original co-founders, got that opportunity, and we started, building in space, really.
Hmm. I want to ask you a couple of things about that. The typical model for law firms is to bill for your time. So I would imagine when lawyers think about this kind of branching off, which is a natural effect of law firms, right? You have law firms that kind of encrust themselves in their reputation. They have very senior partners. They bring out apprentices.
Mm-hmm.
There's people who want to branch off, start a new firm. As that happens, that definitely specializes in certain niches, blockchain being a big one. Were you debating seriously at that time to build out a large scale blockchain law firm, or was that just not in the cards?
Not really. So, first of all, I didn't have quite the experience to really start building out a law firm by itself. I think that my resume didn't warrant really the seniority that I would have to attract. Plus, at the same time, you're always going to be limited to the time of those persons that you involve within this effort. And at the time, at one of the law firms that I did an internship before that, some of the partners there decided to branch off also into their own life law firm, really with a focus on blockchain. And to me, that was a moment where I, considered the opportunity to really build out my career that way. But really, the thing that I loved was just getting involved grassroots level with developers and geeking out about crypto models, tokenomics, being able to think about how you can actually deploy certain blockchain-based business models in a way that doesn't, go contrary to every belief about securities markets ever. Because you've got to, this was also around the ICO boom, and in those days there was a lot of nonsense flying around space, and a lot of, let's say, risk tolerant businesses also. So I thought, well, actually, I would love to get involved with those projects that take a slightly smarter approach around compliance, really taking an ex ante approach instead of this ex post approach, which a lot of even big projects in the space used to do. Um, but to me, starting my own law firm and building that out, it seemed like would always be limited by the constraints of time. It's just by definition not scalable.
And so the strategy with OnRamper is what exactly? How did you go from doing consultancy, crypto consultancy with these companies to then say this is the business model, and what is the business model exactly?
Yeah, sure. So when we started building in space, we originally started building for subsidized by parties like Binance and Neo. Neo at the time being the main competitor to Ethereum in terms of smart contracting blockchain. This was right after they rebranded from land shares. Um, and we started building a number of things. One of them being this cross-chain bridge that was supposed to bring smart contracts to Binance Chain, which didn't have smart contracts at the time. And the other one was a embeddable wallet. And it's really the second one that gave us the view of actually there's a bigger or a more urgent problem here to solve. What NeoLogin it was called, this embeddable wallet did was provide any DApp, any NFT marketplace, which to be honest at that time didn't really exist, but any decentralized application, the ability to onboard users with a Web2 native flow, right? Just a login, creation of a password. But what we would do on the back end was create a wallet for them based on that. And their credentials were then used to decrypt this wallet and actually use it. And that was really cool. But the feedback from the market that we got was, well, this is really cool, but now we've got wallet creation, which is great, right? Because now new users can get started with crypto, but they don't have crypto. So now they have a wallet, but we still have to send them away to Binance or Coinbase to buy crypto and then send that crypto to that wallet and then use the dApp. So taking that as starting point, we said, well, okay, clearly it's very important for users to be able to buy on platform, any platform. And to all of these platforms, that on-ramping, really, that fiat to crypto step, is essentially equal to user onboarding at that point, right? Because 95% of the population doesn't have crypto. So they need to get that on the application itself. And then you run into what any crypto platform at some point runs into is how do you make that possible? Now, option one, the most obvious, is just sell users, sell crypto to your users, right? But the big problem there is that this conversion between fiat and crypto is highly regulated. This is the attachment point for KYC and AML regulations, which means that if you sell crypto in that sense, you will need to get the right licenses for this in every jurisdiction where you operate and start doing these risk-based customer due diligence checks. And as a crypto platform, you generally operate globally, which means a ton of overhead, right? Now, from my legal background, everything aside myself said, well, maybe not the right approach there. That seems like something that's actually very hard to do. So instead, what you do as a crypto platform still is you go out and you look for a third-party solution that does want to take this legal burden, this fiat to crypto conversion. And we call these parties fiat on-ramps. Now, to us, that was like, yes, let's go for it. And then we went out and started working with these fiat on ramps. And for every fiat on ramp, we had to write to them and say, hey, let's start working together, negotiate contract, go for their due diligence, and then one by one actually integrate them in our embeddable wallet. But we looked at this and we said, well, we don't want to spend a lot of time doing this, right? But the big problem there was that the fiat on-ramp market was heavily fragmented. We saw we need one party to cover credit cards properly, one for debit cards properly. We need one for local payment methods in Europe, one for Africa, one for South America, one for Southeast Asia. And suddenly you need 6, 7, 8, 9 different parties because you want to cover any user in any country buying any cryptocurrency with any payment method, right? But integrating all of these parties was so much work. And what we thought we would find in our search for a solution to this problem was an aggregator, right? Because someone must have solved this. For crypto platforms, this ability for end users to buy crypto, I mean, it's the first thing users do. This is user onboarding. Somebody must have at this point already solved this problem of having to integrate all of these different APIs and widgets provided by fiat on-ramps, but we couldn't find that. And yeah, that to us was sort of the inception moment because it seemed to us like this was trying to start a web shop, and instead of integrating a Stripe or a Adyen, we had to write and go out to Visa and MasterCard and PayPal and local payment methods in Europe and say, hey, let's work together, and then go through their due diligence and contract and one by one integrate them. You're not going to do that as a web shop because there's aggregators, right? Somebody that's done all of the hard lifting, the heavy lifting, and that just provides a single widget, a single plug, a single API that you place on your platform. So we saw a very clear problem, and we saw that in the traditional payment space, there's a very clear solution to this as well. And that's how we started OnRamper. So to finally get to your
Yeah.
question, OnRamper is scratching our own itch, right? It is that one API, easy solution, 30-minute integration to ensure that your users can buy any crypto in any country for any payment method. And we make that possible by working with all of the major fiat on-ramps in the world.
Gotcha. Okay. And you're primarily selling into crypto related companies. Is that the target market?
Yeah. So any crypto platform that wants to onboard retail users. So which verticals are those? Well, the obvious ones, wallets, right? You need crypto to store
Mm-hmm.
crypto. Exchanges, you need crypto to trade crypto against other cryptos. But also anything you now see in DeFi or NFT marketplaces. But even things like remittance plays and more also fintechs.
Gotcha. And do you think of it as, I see you guys have raised 6 million, I think, is that right, in venture funding?
That's correct. Yeah.
And the thing that you went out and did is that hard work. So you went out and was it contacting banks in a bunch of different countries to set up a business partnership and explain what you're doing, or was it licenses or other
No, it was
rails, or
really,
what was it like?
yeah. So a lot of this, what we do really is the aggregation of these fiat on ramps, right? So each fiat on ramp specializes in certain regions, but the way they work is wholly non-standardized, right? Every flow from each fiat on ramp, so think parties like MoonPay or Ramp or Wire, is different from the next one. How they handle data is different from the next one. How they handle KYC is different from the next one. So having them all work within a single flow and making that possible, that's really hard on the technical end and on the coordination end generally. Now, at the time we started, also the API documentation was still pretty terrible quality. One of the first parties we started working with went bankrupt. You know, it was all very early days, and still to this day, it's well, even though the parties themselves have professionalized a lot, the market is still quite fragmented in that there is no single solution that you can end up with. And even though a lot of these parties cover now a lot of geographies in terms of the fiat to crypto capability, covering is one thing, but doing it well is another, right? Um, so our heavy lifting is ensuring that the right party is used in the right jurisdiction. Our heavy lifting is ensuring that we not only set up the relationships with these parties, but we ensure that on a technical level, the integration of all of them in once is as easy as it can be.
Got it. So you're checking to see if the integration is easy. You're verifying, just that maybe triangulate exactly what you're not doing. You're not an API, so crypto companies can just like allow users to deposit money into a bank and then it ends up right on the crypto exchange through your API, or
Well,
is that
that
right?
is exactly what we do, but then our API is an access point to the APIs of all of the major on-ramps. So really, it's one API instead of 10, right? Instead of 15 soon.
Got it. So, did you have to go and integrate with or set up licenses or agreements with banks all over the world?
Yeah, so when we look at the fiat on-ramp model, it is slightly different from our model. So look at it this way, right? You've got parties that do fiat to crypto conversion. They get the licenses and they
Mhm.
set up the local acquiring infrastructure. They get the right licenses in order to do this in their respective jurisdictions. They do the end user support. They do the liquidity provision, and they do the actual transaction. Right? They make sure that they get fiat in and send crypto back. Now, that's a layer, and there's all of these fiat on ramps, but we are on top of them, orchestrating between them, making sure that all of them actually can be integrated. So, from a legal sense, we actually, if you see that the focal point of legislation is fiat to crypto, we don't actually enter the money flow anywhere. The fiat is still directly sent to a fiat on ramp, and the crypto is sent directly back by them. So the best way to see OnRamper in that sense is as a middleware API aggregator, just more of a tool to get access to the services, to provide all of these APIs, these services from fiat on-ramps on your platform. And it's on the fiat on-ramps to make sure that they get the right licenses in every jurisdiction. And this is also where it becomes very important, right? Because if you're a big, highly regulated exchange, you want the right parties for the right regions. You want the parties that have the licenses required to do this. And as the world of crypto progresses and gets more regulated, we see that more and more jurisdictions are implementing their own licensing regimes applicable to such business models, right? So this fragmentation that I talked about earlier constantly increases, right? Making it far
Mm.
harder every time to build the fiat on ramp out at a global level, and that's where aggregation and orchestration really provides an advantage to us in the sense that we are extremely nimble in being able to operate on a global scale without much of the licensing burden that fiat on-ramps face.
Yeah. Okay, got it. So is it integrating mostly with open APIs, or will you have some sort of proprietary permission to build on top of private APIs with the banks?
Yeah, so we partner up with every one of these on-ramps. So we work to ensure that we get the right relationships in place. We work to ensure that we send the transaction volumes from end users to them, or essentially the user sends it to them,
Mhm.
to be correct. Um, and I don't know if I fully answered your question there, actually.
Well, this is what I'm trying to ask is, okay, so you're sitting around the table, you say we want to make it easier for banks and these crypto companies to connect to each other to allow their users, the crypto company users, to send money from their bank accounts into the cryptocurrency project. Now, in order to make that easier, we use this word aggregate, but aggregate is you build out the API
Mhm.
endpoints all in one place and then allow the crypto company to integrate just with you guys. And then it's like a train station. It's like all the trains come to the train
Mhm.
station, and then you're basically saying, okay, get on this train, and then you go to this bank and back from this bank with the money. So that's how I think about it. And I'm wondering if you what kind of work went into that? If it was just like, okay, banks have their API docs, we just connect to those, and it's just like a blitz to get into 100 banks, or if what that process was like on the
Um,
bank side.
well, on the bank side, we don't directly work with any banks. We rely on the infrastructure of fiat on ramps. So every fiat on ramp needs to make sure. So the fiat on ramp really takes the
Mm-hmm.
fiat right from the user, then they
Mm-hmm.
convert it into crypto and they send the user to the crypto's wallet address, which can be from the crypto app where this
And
happens.
so so this is now you're talking about. So let's just a simple example. I have a Chase bank account, and I'm using some DeFi, some product out
Mhm.
there that I want like
Mhm.
crypto in. Uh, what are the players along that line from bank to
Yeah,
Bitcoin?
sure. So it depends on your payment methods first, right? So you're in the US, right? So you might be using either credit card or ACH maybe to move your money, right? So let's say you're using credit card, which a lot of users prefer. So when you use a credit card, essentially what you're saying is, oh, I want to send money somewhere, and then in the middle there's banks that make sure that this happens, right? So you have a bank, but then your money goes through what we call acquiring bank in order to move to the eventual end destination. Um, so acquiring banks generally provide this acquiring capabilities in order to make sure that this is possible. And then another player within that is, of course, the scheme, right? The credit card scheme.
Mm.
So if you're using Visa cards, you're using Visa rails. If you're using Mastercard, etc. Um, so that's essentially the infrastructure layer that fiat on ramps tend to build out. And they can do this directly, or they might work with payment service processors in the middle. So it gets, layer by layer more complex in that sense, because PSPs like to also aggregate by themselves. Um,
Got it.
but if you use ACH is this sort of protocol agreed upon in the US between banks that allows for money to move in a more direct sense without hitting these schemes, as far as I'm aware. Um, but then, yeah, the disadvantage might be, it can take a while. It can take between 2 and 5 days eventually with ACH. Um, and
Yeah.
generally, we see that crypto users do not like to wait for such time windows.
Yeah, got it, got it. Okay, cool. So when you started this, it was you. This is obviously a very technical lift, and you have more of a legal background. Was there someone you met who connected with and said like, okay, we have to start this business? Or had you been like, did you hire a dev shop to build out the prototype or learn code, or what was that early product building process like?
So in the beginning, well, I met a few guys and we really hit it off on a few ideas. Now, in the beginning, that was really on this level of, hey, actually, we can make a protocol to have blockchains talk to each other to ensure even the movement of assets between chains. And again, this was like 2018, so the space wasn't as advanced in terms of cross-chain bridging as it is today. Not that today is great, but that's really where we started hitting it off. And I had a lot of ideas around how, well, mostly also where to do this and how to, monetize around that and how to build a business model around that. Some of my co-founders had really great ideas about the technical implementation. So I definitely
How did you meet them?
was very lucky to meet them in a sense, as we hit it off originally on a hackathon. So I went to a bunch of hackathons just
Mm.
to learn more about space, right? To get deeper involved, to meet people, to build relationships. And then one hackathon, we were building this very early DAO, sort of. Well, when we say early DAO, you can go back to DDAO, so I guess it wasn't that early. But we were building this DAO concept for public goods management or something like that. But we just couldn't stop thinking about cross-chain interoperability, right? We
Hmm.
definitely couldn't even deliver on the challenge of that hackathon just because of this. Now we did, and we placed fourth or something, but yeah, from that point, we were pretty obsessed by this concept, and we started building after just talking here and there over Discord over the next few months.
Did you guys meet in person at a hackathon, or was it
Yeah,
remote?
yeah, in person, definitely. So this
Got
was a
it. And are
hackathon.
you guys a local team?
No, so my original co-founders were Spanish. So we
Hmm.
met up in a hackathon here in Groningen, which is the most Dutch name for a city I think you'll hear. Um, and yeah, so we started off building remotely. It wasn't like we moved into a single apartment at that time straight away or anything like that. It was only later that we, yeah, all started. We all moved to Amsterdam in order to set up shop here. Really,
Hmm. Interesting. And where do you think crypto is currently most blocked? Where do you think innovation is stifled the most? Is it on regulatory ambiguity or regulatory bad decisions? Is it on? Do you see it on like a technical integration level, political level, something else that comes to mind?
yeah, that's a very very good and broad question. I think the user experience of crypto is still very, very, very leaves a lot to be desired. Right? We still sort of have this space built for nerds by nerds with all love and good intentions. But when I try to get my grandma to use a yield aggregator, you can forget about it. Right? So I think in order for blockchain to and crypto to make it more towards that early maturity, right? I think there's a lot to be done on the UX end, and in fact, I don't think we've progressed much on the UX end over the last years. We have done so in the custodial sense of the word, but the custodial sense, while making sense for a lot of users, doesn't fully encompass the ideals of the crypto space. So I think for crypto to go mainstream, we need to get rid and abstract away all complexity around even the crypto terminology, right? I can't have to explain private keys or mnemonic phrases to my grandma, which is my personal bar of have we made it as a space. So
Hmm.
um, there's a lot to be done there. I think if this space is gonna go mainstream, then it needs to be as easy as Web 2 with the advantages in UX of Web 3. Because at the same time, while there's too much complexity still around getting started, once you're in, and we all know this, you can do some really cool stuff in really quick time windows, right? You can get flash loans of 300 million without having collateral to back it up, um, just by virtue of proving that you can pay it back in the same transaction, which in the traditional realm obviously would be completely unheard of, right? So there's also huge UI and UX improvements that can be made, but right now they're mainly for the more technologically gifted.
Wait, I just to rewind that a little bit. You said you can get a $350 million uncollateralized flash loan. What does that
Yeah,
mean? And
so flash loans are this
is,
pretty interesting innovation that I think originally came from the camp of Aave, but I might be wrong about that and have some crypto fanatics correcting me here. So flash loan is really interesting. Essentially, a flash loan is saying, well, if we build a protocol where people provide liquidity into the protocol and then tell other people, hey, you can make use of this liquidity for a very small percentage fee, then we can do some awesome stuff. But you can only use it, and here's the kicker, if within the same transaction where you use it, you immediately pay it back too. And it has to be provable that you both loan and pay back within that transaction, otherwise, this never happens. So by doing so, you can essentially have a way where anyone, no matter how rich or what their credit score is, get access to very large amounts of capital, um, as long as mathematically they can prove that they instantly get their money back in where it came from. Now, that's a really cool concept, a really cool building block for the crypto space. In practice, you see this mostly being used for weird arbitrage plays and stuff like that, and sometimes some exploits. But conceptually, it's extremely strong because what it proves is that we as a space can build things that completely puts the world upside down in terms of UX. Try to get a loan of 300 million, no matter your credit score, from a bank, and it's going to be very interesting. And even if you have all of the liquidity to back that up, to collateralize such a thing if required, then it's going to take many months and great relationships, right? um, so it's just one example of how UX can actually be better in a financial sense in the crypto space.
in that case that you're describing, you would have to have at least 300 million to get a $300 million loan, right? Which is not typically how loans work in the
Well, no,
traditional
sure,
finance
but
world.
I'm just using it as an example, right? So in traditional finance world, it's all about essentially credit worthiness and name, reputation,
Hmm.
contracts to ensure that things like this can happen and counterparty risk is taken care of. But what we do here in the crypto space then is say, well, what if we just completely cover counterparty risk, abstracted away by virtue of code, right? Where code, in essence, replaces the role provided by both contract law and trusted intermediaries in order to achieve such things. And I think that conceptually is very strong.
Mm. Yeah, agreed. I even just providing the, like you said, the blocks to be able to do things that you wouldn't be able to do in the traditional finance world. I do think there's a massive gap there in that you can't actually take a loan out based on credit in the DeFi world, which would be amazing if you could, but a lot of things have to happen in order to take a genuine loan out without putting 100% collateral up for that loan.
Yes, and we've seen instances where under collateralized systems aren't designed in a proper way that end up collapsing, right, with the wrong sort of primitives behind it. But this is also a period of experimentation. Now we sadly do experiment usually with too
Hmm.
much money without auditing enough, but there's still something to be said for allowing experimentation and innovation to run its course in that sense, which is yeah.
Yeah, yeah. Agreed. I mean, I do think the harder these lessons are, the more they stick in the collective consciousness, and the more there's a learning
Hmm.
extracted
No,
from that.
100%. It's also funny because sometimes, I mean, do hope that for a while, at least, the space gives up on collateralized stablecoins, for example, which with Luna as a major example, should or USD, I should say, when we reference the stablecoin, should hopefully allow for some more common sense and more diligence in how we experiment, right? Um, because sadly, a lot of such experiments are ran in a way where it works until it doesn't, which, I love the term Ponzinomics, which you sometimes hear in this space. It definitely still applies, right? And then sometimes people like to bring up arguments around, but if everybody would stop believing in the dollar, then it would also collapse. I would be like, yeah, sure, but dollar is legal tender. You can pay taxes with it, which
Hmm.
also
Hmm.
matters.
How is the dollar? How is the sentiment for the dollar seen in your perspective in across Europe or other parts of the world that are not, that are using the dollar, but it's really like, to what extent is the dollar influential and used in
Hmm.
business practices, and how is that
Yeah,
changing?
that's a great question. Now, I do not necessarily have the business insight going back over an extended period to say how things have changed. Um, and I also don't necessarily have the macroeconomic background. But what is very interesting, in my opinion, is that the dollar has always acted as a reserve currency, right? So, in a lot of high inflation countries, access to the dollar is fantastic, and people are willing to pay a fat premium in some cases to get that dollar. And this is something where I think there's a really cool use case in crypto too, um, because essentially what some companies do, like Circle with USDC, or even Tether, even though you can have whole conversations around that, is take this concept of the dollar and access to the dollar and magnify it. Because if your country, for example, is plagued, Sri Lanka right now is a great example, plagued by huge inflation in terms of your currency, then you would love to access the dollar. But what if the government tries to minimize outflows and thereby make this very hard? Then it is very cool that via crypto, you can now get access to the dollar on chain, or at least a one-to-one equivalent of the dollar, as long as it's fully collateralized, um, and thereby protect against economic forces that you can't influence as an individual. Um, so that's one thing I would say to that. The second thing, and this is a really interesting data point. So again, I don't necessarily have the historic view of payments and business worldwide over the last 10 years. But what I do see is this. We allow the clients that integrate Onramper, right? They can set a fee on every transaction. So if you as a crypto platform want to take 1% of every transaction of the end users, we can make that possible. And then we also give a choice. How do you want this 1% to be paid out? Do you want to have this via wire transfer, or do you want to have this paid in a stablecoin on the blockchain? Now,
Mm.
guess how the percentage of businesses that actually choose for the latter? Because it might surprise you, and by asking the question in this
Mm.
way, I might ruin it for you. But
Mm.
it's a good.
None, all of them.
You covered the spectrum, definitely. Yeah, no, it's a good 85%, which is a very interesting data point. Now, of course, these are crypto platforms by nature, so they all have the knowledge and the architectural setup to be able to take stablecoins as payment. But once onboarded within the stablecoin ecosystem, therefore 80%, 85% of businesses choose actually prefer that over traditional payment rails, right? Which I didn't expect at all.
Hmm.
But it does make sense in terms of speed of execution, in terms of transaction costs. Yeah, it's pretty cool.
What do they prefer? Sorry, the crypto companies are preferring, the users are preferring to deposit
No,
money
so
in
no, no,
USD,
no. So the crypto
USDC.
companies, we pay crypto companies, right? They if they set a commission, we pay that
Hmm.
commission out to them, and they prefer to be paid in a stablecoin
Hmm.
on the blockchain as opposed to wire transfers.
Oh, okay. And that seems intuitive to me. Does that seem
Well, to me, it
surprising?
was slightly surprising. Yes, I think 85% is
Mm.
a huge number, and I think that stablecoins increasingly for B2B payments, especially on an international scale, will start playing a bigger and bigger role into the future if these insights are worth anything.
Yeah, yeah. Yeah, for sure. That's the lowest hanging fruit for the transaction from the offline world to
Hmm.
the on-chain world, which is take what already people are doing, which is moving USD around, putting it on chain in a verifiable, trustworthy source. And that is, if you can get there, then you can easily move around in the crypto world. But like moving between dimensions, getting into the
Hmm.
crypto world in the first place is the hard part. So I view it as like you could almost say stable coins are a gateway drug where they get people in the game and then they
Yeah,
start moving
exactly.
around once
And
they're in
that's
there.
actually, they actually originally were created also to allow easier transition between these two worlds by sort of faking one of them, right? So the idea was a lot of crypto
Mm,
platforms don't want to have fiat currencies, euro, dollar, on their platform, but a lot of users do want to be able to flee to fiat currencies. So how do you solve that? Well, that's where stable coins came from. But I 100% agree with you. Once businesses are in the ecosystem and familiar with stablecoins, especially for international payments, they will use that and generally prefer that. But the gap to actually get there is large, right? Because there's so much, at least perceived complexity, but also just complexity in terms of how do you ensure safety of funds, how do you manage your own funds, but their custodial solutions are probably, you know, the thing that make companies more at ease, especially if you can insure deposits in the
mm.
custodial system or something like that.
Yeah, it seems once you have a robust sort of industrial level, stable B2B solution for for wallets for companies, it's not that dissimilar from a bank. Or in a bank account, if you have a business bank account, there might be two keys or so to make a wire
Hmm.
transaction. Like if a company, say, $100 million company wanted to move $5 million in cash from their bank account to their vendor or something, then there would have to be a double opt
Hmm.
in. So like CFO and CEO both have to log in separately and certify that. But it is
Yeah.
kind of key based. I mean, it's authentication based, I guess you could say. It's not really there's not really a key on chain, but it would be a similar experience, and I think you could quite easily. I don't know if I mean, what do you think? How do you think it'll shape out? Like, how do you think companies and how do you think the integration of the crypto world will really enmesh itself into the traditional fintech world and business
Yeah,
world
I
more
think
broadly?
it's a gradual process. I think the key enabler here will be regulation,
Mm,
because while the um, convenience, maybe, reasons are there, the complexity is still there, but I think really this a sort of inflection point can be reached once the more traditional financial institutions, electronic money institutions, or fintechs, neobanks start feeling more comfortable with this, right? And they will only start feeling more comfortable with this if it's properly regulated. So the regulation around stablecoins, well, often crypto space will perceive regulation as this bad thing, right? The big mean government is coming to step in on all of our innovation and everything's going to hell. But in
mm,
reality, we've got to bridge a gap when it comes to the more incumbent parties in the world, and that only happens through regulation, right? Because as a bank, you're essentially in a race to be second. And this is what you often see if you talk to
mm,
blockchain teams at banks. They build really cool stuff, really advanced crypto stuff. They do have the knowledge, they have huge attrition in employees, but that's something else. But they build cool stuff, but they cannot get it past their compliance teams, right? And the reason for that is that compliance will look at it and say, well, no, right? There's not enough regulation around this to keep this safe. Any party that we might involve from the custodial end isn't well enough regulated. There's not enough checks in terms of what people are involved, what minimal capital requirements there are, what the minimal auditing requirements are for custodians, etc. So I think once that's figured out, we're a lot closer, and then still it takes time, right?
Yeah, yeah, yeah. What do you think about the Sri Lanka situation and maybe the impact or the pattern that that is having in the world economy more broadly? Like, do you interpret that as being part of a pattern, part of some um, understanding about maybe supply chain issues related to COVID, or do you see this as like a more substantial uh,
Mm.
thing than just COVID? Like COVID to me is like, okay, there's a blip on the radar. What I'm more interested in is what's the dynamic of political institutions and academic institutions and business institutions going forward as it relates to like this sort of like grassroots revolution in the network state of crypto
Oh man,
related projects.
that's a toughie.
Take it wherever
Yeah.
you want. Give me your
That's
high level
funny.
thoughts.
Yeah,
What do
so
you
I
think
think
is going
the
on?
situation in Sri Lanka is interesting. I'm generally quite hesitant to speak out on subjects that I don't know too much about. But what I do know is that as a country, they've
Mm,
been rebuilding for a long time, and from a governance perspective, it hasn't the ones that were leading haven't always been the most diligent in their approaches economically. Um, Combined with supply chain issues and COVID, that has led to issues which eventually result in the common layman not being able to have electricity. Now, as soon as you take electricity out of the equation for you or me, also, you're not going to be happy, right? And in that case, you will get situations like this. I don't know what the role of crypto would be or the relation with that. But I think that overall, Sri Lanka, the people of Sri Lanka will be quite happy to be able to push what they currently have away. The question is always what follows it up. That's the hard part.
do you see us? Do you see the world as having more or less instability over the next 5 years or 10 years?
Um, that's an interesting question. So it it does look like we're overdue for a bigger correction, recession, which generally can come with some instability.
Mm,
Um, but I do believe that if we take 10-year views, I think things tend to even out a lot. Um, they return to the mean generally, and we've seen corrections right now already in, the tech space, tech stocks, but also the venture capital space, right? Things now are very different than they were a good 6 months ago, right? Um, Over
mm.
5, 10 year periods, who knows, really.
How was your fundraising journey? You guys raised 6 million. Was it through traditional VCs and the traditional path of starting a company, having equity in the company? You guys didn't spin off a token or go that token economic
Yeah.
pathway. Is that in the cards, or do you feel like just straightforward company building makes more sense?
Yeah, I've always really believed in company building. I think generally tokens can have an effect where it makes more sense for the economically rational individual or business to optimize for the value of tokens instead of build a business that creates value, right? So you might start to over optimize on partnerships that you can market instead of things and problems you can solve for users. So that's why generally I'm hesitant towards a lot of token models. um, our own fundraising journey was really us building for a good 9 months and paying ourselves barely anything, in order to then, at the point of reaching our MVP and starting to see transaction volumes run through the business, do a initial pre-seed round. And what we did there was simple convertible note, with especially angels from the traditional payment sector, from the credit card world, from the world of payment service providers. Especially the last one I found very important, because if we're going to purport to bring this PSP model towards fiat on-ramps, then it might probably make sense to learn also from the road that PSPs have taken over the last 10 years.
Are you saying PSPs, payment service
Yeah, so
providers?
yes, the payment service providers.
And who would that be? What's or who have you raised from on PSPs?
Yeah, so that's individuals that were very early with involved in some of the major PSPs, and there for
Mm,
the entire road to build that out on. One is more from the go-to-market perspective, and another one really from the technical perspective about how do you orchestrate payments in a smart way. Um, yeah,
mm.
and after that initial round, and this is something I strongly believe in. I think it makes a lot of sense to over optimize for the value that investors can bring aside from capital alone. Because capital is quite commoditized. Now, maybe now
Mm.
a lot less than 6 months ago, but it is quite commoditized, right? So it makes more sense to raise and optimize for vision alignment, for network, for additional value they can provide through knowledge, expertise, domain, than just a pretty valuation or some good terms. Now, of
Got it.
course, the last two are important, but yeah, generally, I would say that's a good rule of thumb.
Yeah, yeah. Got it. So payment service provider, PSP, is an individual person that is maybe are you thinking of it as like an LP? This is somebody who's investing money into a fund and then you're taking money from the fund? Or are you talking about
No,
like
so
raising money from your
I'm really talking about individuals, so angel investors that worked at and founded payment service
Got it.
providers.
Okay.
Yes.
Got it. Got it. Somebody like PayPal, Venmo, those kind of companies.
Yeah, the Argents and Stripes and that kind of stuff.
Hmm. Got it. Got it. Interesting. What are other ideas that you think about? So you're building this company, a background in law. Are there things that you think about more from a long term perspective, or we talked a little bit about pre-show the idea of things that you believe that most other people wouldn't believe. Um,
Yeah, I mean, what I like to, well, obviously, as a founder, you generally tend to think a lot about the business that you're trying to build, right? Um, but one of the things that I strongly believe in and like to apply constantly and think about is the concept that essentially the average sucks. And the idea behind this is that that's not necessarily a bad thing, but a lot humanity generally we like to optimize for comfort as opposed to discomfort, which makes sense. We like to take the path of least resistance instead of doing the little bit extra to move out, stand out, and overcome, overachieve. Maybe a good example. So in high school, no, in university, um, there was this really cool exchange, right? There's this opportunity for me to potentially go out and go to Madrid to study for half a year, just a semester at this really expensive private university that otherwise I would never have money for to go. Um, and there were two spots for the entire university. The university had like 80,000 students, right? Now, me and a friend of mine, we were convinced those two spots should be ours. We should go, but the chances were very slim. But by just taking the mindset of the average kind of sucks, we were within half a day's work able to essentially guarantee that it would be us two going on that exchange. And the way we did it was just sit down and think, well, if the average sucks, everybody does sort of the same thing, right? The means is pretty easy to identify. What people do in that case, everybody would write a motivation letter saying why they should be the ones be able to go. But that isn't the most like that can't be
sure.
the best thing you can do, right? So what we did instead was we spent half the afternoon just brainstorming. Then we came up, and this was in days also around Obama's change campaigns. We thought, well, what if we just make a poster of us two, right? And instead of change, it says exchange, and we use the same filters to make it look very Obama-esque. Then we hang them around campus, and then actually via we were like, oh, actually, I know somebody that studies there via. Why don't we ask people there to say our names, Maas and let's say Jacob, for exchange Madrid. And then they asked other people at university, and suddenly we had all sorts of video footage to make a little campaign video, right? And then we sent that to whoever we identified who was going to make the decision on this. We just sent this over. And then also, as a final little touch, we made sure to put that big poster of us two on the door so that you couldn't look around us. Now, if you're making this decision, and for many years nobody has ever done something else than just write a dumb motivation letter, there's not a way in the world that you're not going to let us go, right? And that's what I mean. This it's very easy to spend a little bit more effort, a little bit more creativity to do things in
How
different
was that
ways.
interpreted? How did this person interpret your strong campaigning?
Well, I'm guessing she found it funny and probably told her like relatives, maybe, right? So people like the quirky, people like the extra step, and yeah, we got those positions.
Oh, you did? Okay. And did they overtly attribute the awarding of your roles to the campaigns in the video?
Yeah, I can't actually remember the email that they sent, which I
Huh.
should look that up.
That's interesting. There is kind of it's a spectrum, I do believe, because on one side you can become a nobody, right? You're just not standing out at all, and your letter is just like
Which
a
by the
thousand
way
other
is
letters.
completely fine as well, right? That's 100% okay to do as well.
I mean, but it's not if your goal is to get in. So you could view it as like if there's only two slots and it's a finite game, it's a waste of time to do that. So
Mhm.
if, there's nothing wrong with it, but there's nothing wrong with throwing rocks. It's just a waste of time. So I view it as like, okay, there's a spectrum. It's not even productive. Like I would view it as like maybe you could argue that they got some value out of writing the letter, like they became better writers through that process. Maybe that's like saying, if you and I are going to race, or say we have 100 people race,
Mhm.
and there's the cash prize for the top three winners, like the person who comes in like 99th place, well, they got exercise. That's great. They got exercise. So maybe you could argue that. But
Mhm.
back to the spectrum. There's a spectrum. There's like a spectrum of very, very little effort, and then there's a lot of effort. And on the a lot of effort, there can be a sense of you're doing too much. Like you'll see this sometimes
Mhm.
with founders I'll talk to who are trying to raise money, and they're like, "Oh, I should send a giant basket of flowers and a bottle of wine to this investor that I'm going to meet before I meet him, or maybe I should just fly there and surprise him in person at his house. Oh, that'd be great, and I could wear his T-shirt. Like there's kind of a like." How would you say it? It's almost like you can feel the cringe of it, where
Mhm.
if people are trying too hard, it's just like
Yeah.
dating, right? It's like you want,
Yeah.
there's a fine line in chivalry where you're trying to impress someone, show them that they're special, but also not show them that you're desperate. And I
Yeah.
think that's how I interpret it.
Yeah, no, for sure. And depending on the relationship between you and that person, it's going to differ, right? Because
Yeah.
you definitely, I mean, I think dating is a good example there. You don't want to over try and validate yourself in the eyes of the counterparty in some cases. But I think generally, since everybody's quite cautious with this, I think it's good to push the boundary a little, and you'll probably
Mm-hmm.
realize when you've reached cringe territory. I like that.
Yeah.
That take.
Yeah, yeah. I think you're in a good example there where you have probably a lot of people doing the exact same thing without really much creativity at all. And so it's almost like the decision maker is starved for somebody to do something interesting. Whereas founders tend to filter for people who are highly creative and highly ambitious, and probably not very shy people. So they're the type, if you get 100 founders together, it's like you're just going to get there's going to be flowers and wine and change posters all over the place. And you're like, all right, stop. Everyone just submit a letter. And
Yeah, exactly. Then it's good to, if
yeah.
you want to be contrarian, good to do the boring thing in that case.
Yeah, exactly. How about other people? Are there other books or people that have influenced you to a significant degree you want to throw out there?
Um, yeah, I'm actually a very big fan of long form content like you are. So I've
Mm,
always found, and this may be a bit cliche, I've always found Tim Ferriss's podcast pretty interesting,
mm,
ranging basically long form interviewing anything from philosophy to history to business to startups to investing, just interviewing what he perceives to be great performers and trying to get into the nitty gritty of how people think and mindset. I always kind of like
mm.
that. And maybe another cool thing is a book that you might have heard a few times before on your show as well, which is The Hard Thing About Hard Things. Um,
Mm-hmm.
Now I have to Google real quick who wrote that, unless you know.
Ben Horowitz.
Yes, exactly, of course.
Yeah,
Yeah,
from A16Z. Yeah, it's a popular
exactly.
one. It's a good one.
Yeah, it's really cool because it doesn't glorify the entrepreneurial route, which other books sometimes tend to do a little.
Mm-hmm. Awesome. Well, Tice, congrats on all the progress so far, and I hope you guys keep ripping, and hope you have you back on someday.
Yeah, no, for sure. Has been a pleasure. Definitely
This was fun.
enjoyed the chat.
All right. Cheers, my man.